Good afternoon, ladies and gentlemen. A warm welcome to all of you. Thank you for joining us so numerously. Certainly one of the largest events Grammig Advisory has ever hosted, not least thanks to our incredible panel and the sponsor of this event. Without any further ado, I will dive in. Welcome you again, a few technicalities and walk you through the agenda. 150 participants from all over the world are joining us today for this unique fireside chat hosted by Corinth Capital. Thanks to all of you for dialing in from all over the world. For some of you, it's quite early. For others, it's quite late already. So it's a pleasure to have you all on board today. We will discuss the impact of the global pandemic on governments and them now focusing more than ever on sustainable development. This is the topic of our fireside chat today. Sir Christopher Pissarides will explain to us why that is. And later on, Dr. Ranjit Nayak will elaborate how private investors can benefit from this development. The gentlemen also are so kind to answer your questions afterwards in a Q&A session, which offers you the rather unique opportunity to directly engage and discuss with the Nobel Prize winner in economics, Sir Christopher Pissarides, and his colleague, Dr. Ranjit Nayak, a former senior World Bank member and an advisor to two governments. But before we get started, just a couple of organizational remarks from my end. To submit questions, which you will have and which you will read out afterwards, please use the chat or question function in the control panel to your right. On the right-hand side of your screen, you see that, where it says questions with a little arrow, click on it and submit the questions. You can submit these questions anytime throughout the session. It will not disturb our conversations, and the questions or comments will be collected and I will read them out afterwards. Also, please note that you are not visible to other participants, so you participate anonymously. Nevertheless, we would kindly ask you to respect the Chatham House rules. And now it is my pleasure to hand over to Mr. Andreas Matsas, the CEO of Corinth Capital, to welcome you and officially open this virtual gathering. Andreas, the floor is yours.
Thank you, David. Let me also welcome everyone to our fireside chat with our two distinguished advisory board members. Ladies and gentlemen, after a highly turbulent 2020, the new decade begins with a search for sustainability and certainty. As investors' preferences shift towards more perpetual solutions, a new challenge arises. Which platform would provide an investor with access to the most promising, high-yielding, and sustainable opportunities? And this is where Corinth Capital Fund comes in. Corinth Capital is a fund for well-informed professional investors whose primary focus is to provide access to capital and ongoing support to businesses providing solutions to issues pertaining to ESG themes. Green energy, agriculture, and waste management are some of the niches that Corinth is active in. The fund's attractive return profile emanates from its broad, well-established network of associates that allows privileged access to select high-quality assets. This, coupled with vigorous transaction structuring, enables Corinth to offer investors a highly attractive niche product with a superior fixed return and minimal downside risk. Corinth Capital is successfully combining enhanced security and attractive returns by carefully selecting and actively managing each project every step of the way. The process begins with the identification and primary screening of investment opportunities sourced through an extensive and robust international network of trusted associates. The investment process, from initial evaluation to capital deployment, is managed and overseen by a seasoned team of industry professionals with unparalleled experience and insight developed after years of global market activity. Every project goes through a phase of thorough due diligence, asset valuation, and benchmarking. Corinth Capital's investment committee, with the support of its advisory board, ensures the viability and upside potential of every proposal before granting their approval. According to our fund's philosophy, a project's cash generation profile, the relevant market's growth trajectory, and the quality of its management team are crucial elements for success. To that end, a thorough multi-layered evaluation process is in place, ensuring selection of assets with optimal risk-return profile. The following step constitutes insuring the invested capital and the project itself with top-tier insurance companies. The fund will then manage, supervise, and support the project, delivering a fixed net 8% annual return with downside protection starting from year one. Ladies and gentlemen, our mission is investing in the future. Corinth Capital outlines the green energy segment as one of our primary focus areas. Consequently, the fund's vision is closely aligned with the global perspective on renewable energy sources. With lower green power costs, broad energy access, and reduced levels of emissions and air pollution at the core of our investment strategy, Corinth is the first choice for investors interested in ESG investment themes. With the already mentioned dynamic screening process and the extensive global network, our fund is well placed to offer investors a very attractive return through sustainable investing. Early 2021 is the best possible time to enter the ESG scene as decade-defining trends are beginning to take shape. Thank you all for your attention, and back to you, David.
Andreas, thank you so much for the welcoming note, for the remarks, for your kind words, and most importantly for hosting this event today, making it possible for everyone to participate in such a unique discussion. And as previously announced, the first speaker up now is Sir Christopher Pissarides, professor at the London School of Economics and the University of Cyprus. In 2010, he was also awarded the Nobel Prize in Economics. And further, he was picked by the Greek Prime Minister to chair a committee tasked with drafting a long-term growth strategy for the country. Since September 2020, he's also chairman of the Economic Council of EuroAfrica Interconnector. So Christopher, it is an absolute pleasure having you on board here today. Welcome and thank you for joining us.
Thank you.
So Christopher, in your interview with the Private Banking magazine, a German-speaking magazine, you described the coronavirus as a natural catastrophe. But natural catastrophes ransack a country in a matter of hours, sometimes just minutes, and afterwards nations start rebuilding immediately. But the coronavirus has been around for more than a year now, killing people and economies alike, and nobody seems to be rebuilding anything. What should governments and businesses do to soften the blow?
Well, thank you very much for that introduction as well. Let me elaborate. I mean, it's a natural catastrophe in the sense that it was unexpected, and once it hit us, we didn't know what to do other than impose enormous costs on ourselves and on our economies to keep it at bay. And it's only when vaccines came around that we realized that science can help us do something, and we're doing it. Now, there are still a lot of uncertainties coming out of it. We're still not quite sure how the world would change when we come out. There are definitely changes. There is now technology for remote work, and remote work will persist. There is technology for avoiding a lot of business travel, and that will persist. And what governments and businesses can do is to is obviously monitor the situation, but follow closely the new technological developments, learn what we've experienced. They may be mistakes, they may not be mistakes, but we will learn and act accordingly. And one of the important things that we learn, as if we needed to learn it, most of us knew it, but we did learn it, is how much damage human action can do to the environment. It's one of those things like, you know, a little light comes on and says, oh my God, you know, is that what we've done? Look at it now, how different it looks and how it's changing now that we curtail economic activity. Of course, I'm sure there are millions of scientists and even economists on the planet that will say, I told you so, but it's different when you see it. So coming out now, there is renewed emphasis on sustainable growth and development. And businesses have to play along because it will be for their own benefit as well as for the benefit of humanity.
Well, why do you think that a virus triggered this? Why? Because, you know, it's interesting because unlike a tsunami or unlike any other natural catastrophe, unlike the virus that we're discussing, climate change is much bigger. The effect, you know, is not punctual. It's not on one country. It's not something that surprises us, because climate change has been discussed for decades even, and it creeps up on us, and we could have stopped it before, we could have slowed it down before, yet no action has been taken. So, you know, rising sea levels, melting ice caps, Australia was burning last year, Brazil, the Amazon is still burning. And this doesn't trigger us to recognize that something needs to be changed, but you say the virus does. Why is that?
You see, that's very interesting, and I think it needs both a little bit of psychology as well as economics, politics, and science to explain it. Because, like very correctly you say, a virus cannot be the reason that suddenly there is more attention to sustainable economic development. We should have known better before. We shouldn't have needed a virus to generate this interest. Now, why is that? Economists have always been talking, and in common sense, it doesn't need any deep economic knowledge, that when you talk about economic growth, it has to be sustainable. There cannot be economic growth and development without sustainability. You know, to over-dramatize, if we have an economic growth that destroys the planet at the same time, it's not much good. We're not going to be better off at the end of it than before, whereas the purpose of economic growth is to make everyone better off. Therefore, you might say, why should we need a virus? You know, is it a failure of economists to tell people, or policymakers to tell people that, look, if you are going to invest for growth, it has to be sustainable, otherwise it's not growth? The answer is that you need a disaster. You need something to kick you into action about something that you've known, but you didn't have a big incentive to do it. And partly the underlying trends, you know, the Paris agreements, all this debate over the United States under the Trump administration about the environment, and they denying, many talking so much in favor, others denying it. The pollution coming out of China in its growth, because when China decided to open up in the early 70s, they decided to do it through heavy polluting industry. They didn't decide to do it in a sustainable way back then. There were all those underlying trends there. And then it's the realization I mentioned before, that you suddenly have a sudden curtailment in economic activity, and you see the improvements in the environment. And you bring those things together, and suddenly the most influential governments in the world are talking much more about sustainable investments, sustainable infrastructures, and they are genuinely diverting their efforts in that with that objective in mind. To give you an example, the European Union, which is providing generously for its country members to come out of the crisis. You mentioned before that I was appointed by the Greek Prime Minister to chair a committee to draft the program. That program was the source of the proposals that the government put to the European Union, for example, in its recovery program. it's saying that it will divert 25% of those funds for on ESG investments. The UK government, which is outside the European Union, of course, so it's not part of this program, has committed close to £4 billion for green recovery post-COVID. The US administration has changed, and Biden immediately joined the Paris Agreement, and he's following a lot of green policies. And China is now moving away from heavy industry and is committed to decarbonization. So there is a trend, a sort of sudden turning point, if you like, where governments suddenly are committed to doing more on ESG. Therefore, this is the time to take advantage of it. Don't let's lose it. Don't wait a few years until governments say, well, we've done our bit, business hasn't, or private investors haven't. This is the time to ride that wave and make it really work for us. It's a unique opportunity.
Do you think it's perhaps also because the coronavirus is a very democratic catastrophe? Because as opposed to natural catastrophes, we often see them hit countries that are already poorer anyways. It's like in the developing world, but we've seen heads of states, whether it was Bolsonaro, whether it was Boris Johnson or Donald Trump, heads of states, government officials, people of all walks of life have caught the virus, and perhaps this is sort of a wake-up call. This is a lot more real than perhaps a burning forest halfway around the world. Do you think that this has something to do with it?
That's part of the realization that I mentioned before. Maybe I should have mentioned it, that we see it at our doorstep, what's happening. The sky in Beijing became blue, that kind of thing. Over here, you walk out, when I say here, over in London, you walk out in the streets and you don't come back home and remove sort of dirt from the many cars on the road, that kind of thing. Although London has cleaned up quite a bit recently, I have to say. It's partly that. Let's not realize, though, you use the word democratization of the crisis. Let's not realize, though, that within countries, especially, it's affected social groups, demographic groups, much more differently and unequally. And what's worst about COVID, when you look at its democratization or its universality, is that it affected the hardest, the groups of the population that had the worst deal before. It affected them much more than those that didn't. Take remote work, those of us who can work on the internet and have houses with study and carry on more or less as before. We sit in our studies, we have our computers in front of us, we work. Those whose work involved going to a workplace, be it manual or office work, but not one that they could carry home, cannot carry on working. And it's a very unequal shock across the population within countries. But it's I'd say universal rather than democratic, in the sense that it's not a part of the Amazon forest burning, which is a disaster, and we see it on our TVs, and then once the TV goes off, we say, what a disaster it is, and then go back to our comfortable homes. We see it outside, happening outside our door, if not inside our own homes.
Yeah. Okay, so I shall rephrase the question then and use the word universal rather than democratic, but point absolutely taken and accepted. But let's go back to the sustainability move that has been kicked off or accelerated by the virus. Which sectors of the economy will be most affected? And I mean in a positive sense. Where are the opportunities? Where is change happening?
Okay, here what we have with the ECG is we have the sort of obvious sectors which I'm sure you and our audience have heard it many times before. Renewable energy is obviously going to be a big expansion sector. Waste management will be an expansion sector, or ones where research needs to go into better ways of transportation, electric vehicles, for example, which we're already seeing. But what's more interesting though here is that the ECG movement, revolution, if you like, if we call it, cuts across sectors of the economy. Companies in almost all sectors of the economy, if not all entirely, can be identified as ones that pay attention to governance, more diversity in their employment, more equality in their pay, gender balance, racial balance, treatment of disability, disabled workers. That's the G of the ECG. It's governance, part of it. Companies that are careful not to pollute, that have a nice environment, nice working environment. They have stakeholders, customers, employees, suppliers that they take into account in their policies. They have a purpose, a social purpose in their community. Those companies are ESG companies that deserve the investment. And in fact, if I could throw in a plug from Andreas Matsas, who spoke earlier, the reason I was attracted to Corinth Capital is that they are looking for this kind of company to invest in. Not any company in the 2 or 3 sectors you can identify, but companies that cut across and do things properly. So when it comes to ESG investments, I would go more micro than selecting sectors. In micro, in the sense we use it in economics, which means look at the individual unit of production, the company, and ask yourself, does it have a good purpose? Is it doing it well? Now, one thing I should mention here is that we have much more information on companies, on their financial performance. And it's much easier for anyone looking at a company performance to say, oh, this company is doing better than this because it's had shares have a rate of return that's so much higher than that one, and its capital ratios are better, and so on and so forth. It's much more difficult to look at a company and look at its ESG performance. Is it diverse enough? Does it have a good social community purpose? Is it good for the environment? And that poses problems for investors in ESG. I don't want to discourage my friend Andreas from his previous speech about investing, but it will still adhere to the famous Friedman doctrine, where it says the best social purpose of a company is to maximize the rate of return to the shareholders. This is much more easily to select investors than if we go for the best governed and the environmentally friendly company. And I realize I'm talking to all, but one more thing to mention. And unlike financial performance, when it comes to performance on sustainability, we do face trade-offs very frequently, in that the company is not necessarily best across the board. It's doing some things that may not be quite ESG, but other things that are. Take a company that supplies petrol or gas, as some people call it, for cars. It might be doing wonderful things in its community that it's operating, but at the same time, it's supplying a polluting energy source. Now, do you support that company or don't you? Do you put more weight on the environmentally beneficial things that it does, or maybe it employs a more diverse labor force than any other company? Or do you say, no, they are selling things that pollute the planet, therefore I'm not going to support them? Those trade-offs will be faced in looking for companies to invest in sustainability.
Would you promote an ESG balance sheet for companies to make it more comprehensible and comparable, I mean, we look at balance sheets of companies now in terms of financials, right? And this is how we evaluate a company, and we decide whether, you know, it's a good or bad investment. Should we have the same for ESG standardized?
Absolutely. In a perfect world, every company will come and will say, "This is my financial performance, and we know enough of that. Don't spend more time investing in that. This is my ESG performance, and we don't know nearly enough of that, and this is where I'm going in the future." And when we do our due diligence on a company looking for an investment, we look at the two and we decide where to go. I would strongly support that. We're in the ESG balance sheet. The company states its purpose. You know, my purpose is to take best care of my employees, for example, and my customers, my stakeholders, and this is what I'm doing to achieve that purpose. Or my purpose is to help my local community, which is a small town in such a place, or it's such an area of a bigger city, and this is what I'm doing to help it. And then we evaluate on that basis, and we invest in those companies that fulfill the purpose that we believe is the one that we want to commit our money to.
We talked about very briefly. You touched the topic of digitalization, like how there's less necessity to travel nowadays. I mean, look at us being connected here on GoToWebinar. Others use other platforms. But does sustainable development have to go hand in hand with digitalization, or can we actually separate these two?
No, we cannot separate any kind of economic development from now on from digitalization. It's a new technology. It's like you told me 100 years ago, can we separate electricity from economic growth? How can you do it? You know, this is where new technology is going. What we could do is to make sure that we use it for the social good, and not just to create machines that kick out the workers, and the very few owners of the machines become extra wealthy, and the others are wandering looking for jobs and ending up in gig employment. You know, there are ways of doing the research in the socially beneficial direction, applying the digital technology in that socially beneficial direction. The obvious one is health. You know, if you're going to do research in artificial intelligence and other digital technologies, don't focus on how can I make those machines do what humans do, but even better. You know, don't try to invent the next machine that is going to beat the next grandmaster in chess. You know, I mean, those are fun to tell stories about, but so what, you know. Invent a machine that is going to improve our health standards, that is going to give us health treatment that doesn't involve waiting for hours in hospitals and coming up with things that may or may not be right, that they get it right, you know, that kind of thing. And then we're going to see digitalization helping in sustainable development. But one thing to emphasize is that digitalization is here to stay. It's a good thing, I believe, if it's used correctly. And don't look or think of sustainable investments that are free of the new trends, you know, the fourth industrial revolution, as some people call it, and do it differently because you don't like digital technology, or you don't like robots or whatever, because they're here to stay, and we better embrace them and make sure that they're friendly towards us than the Frankenstein's monsters that will kick us out.
I've got a question with regards to what drives this new development. I mean, you touched base on it briefly, I think in the second question that I asked you, but what's the driving force behind it? Is it new laws and regulations that will be implemented? Would it be the governments who simply divert their investment towards sustainable projects? Or is that something that is driven out of the private economy, and then the governments react to it rather than act upon the need for sustainable development? I mean, we touched on it already, and we've been talking for 25 minutes. So this one, perhaps, a short answer.
This one has a very easy answer. It's all three together. There is more realization. Now, governments are directing more investments. Governments, remember, are a big player in the economy, and where they invest makes a difference in the infrastructure and so on. And they're doing it more and more into sustainable development. Then there is realization by the public, by us, the consumers, and we seek it more. What you might call the Greta Schönberg, her name is, making us aware, or the David Attenboroughs. I saw recently a survey where it was done in Britain, of course, where they voted David Attenborough as the person that influenced them most about the environment. Presumably, he's quite well known outside Britain as well, David Attenborough. I see with his program. Yeah. So that's the social realization, and it's the change in circumstances that we've seen through COVID, how much damage we've actually done. So it's all three together. You cannot have only one and not the others, and yet make it work. It's like what we call the European Union, the social partners, or maybe what you call in the European Union, but I'm also a Cypriot, so I can call myself a European Union since, thankfully. And it's like a social partnership that is taking place at the same time, and one is reinforcing the other.
Mm-hmm. I'm going to quote Angela Merkel now, and I mean, we do have a few German participants here, but many Greeks, so they might heavily disagree. One of her most cited sentences during the Euro crisis was that we will emerge stronger from this crisis than we went into it. This is probably true for Germany, perhaps for a few other countries as well. The Greeks might protest this, rightly so. But do you think that there will be a clear line between those benefiting from the pandemic and the new focus on sustainable development, and those who have to pay the price, and who are they?
Well, Angela Merkel, one of the politicians I admire most, even if I don't always agree with her. She says, but on this one, I think I do agree. Politically, the European Union is going to come out stronger. It seems to be acting more as a single unit this time than the previous crisis, for example, in the debt crisis, which provoked the comment that I made a minute ago of 2012. And the reason it's doing it is going back to what you said before, the universality of the crisis. It affected North and South Europe to the same extent. So you cannot blame the Greeks and others about their debt behavior. You cannot blame them about the virus. The Germans have been badly affected as well, and others. Now, economically, it's also coming out stronger because of this program they agreed. I do think it's significant, actually. I think it's a major event in Europe to provide this support for all its members, because there is a central, Brussels, what the Brits are so fond of calling the bureaucracy and the gravy train and all that, which I never had any sympathy for. But here is a strong central administration there, which is suddenly distributing these funds throughout the membership of the European Union and addressing common objectives like sustainability. The 25% is saying, we all together need to approve the projects that we are funding from central funds to be beneficial to our whole union, to be more inclusive than we had before. And that will bring us out stronger. Thankfully, there hasn't been an attack on the euro. Otherwise, we need another Draghi moment that will do everything that needs to be done to rescue it. But we don't have a financial crisis now anyway.
So, Christopher, thank you so much for taking the time, for answering our questions. You will stay with us. We need you later on again for the Q&A session in a short while. Thanks again. If this was a live event on a podium in a conference room, I'm sure there would be a big applause for you. So everybody, please clap in front of your laptop and camera, Sir Christopher. Thanks for participating.
Switch the run machine on like they do in virtual football games nowadays.
So now it's my honor, and I can see him already there, Dr. Ranjit Nayak. Pleasure to have you and to be able to introduce you. You are a former senior staff member of the World Bank, and you currently serve as the chief advisor to the government of North Macedonia and Lebanon. Further, you're on board of several NGOs, and you are an entrepreneur yourself, having founded 2 companies and a European startup. It's this very diverse and multi-layered background that allows you actually to wear also the investors' hats today and explain how the sustainable development movement can be leveraged by private investors too, because this was one of the first comments and reactions that I received when I invited investors' family office, and they said, well, I'd be very interested to see what an economist is going to say on the opportunities for us as a private investor. But as you are one yourself, certainly you are capable of sharing some insights here. Before I get started, ladies and gentlemen, I see the questions are coming in already. Please make use of the question function on the right there. We will collect them. If there's anything you feel Sir Christopher has not responded to or answered yet, please submit the questions. I will read them out. But now back to you, Dr. Nayak. Thank you very much for being here today with us, and it's a real pleasure to have you on this panel. Let me start with a simple question. Do you agree with Sir Christopher and what he said previously, or more interestingly, if not, why is that?
Yes, certainly. I do agree with Sir Pissarides' analysis. It kind of lays out the main currents shaping the world economy in our times. We can discuss about the COVID pandemic till the cows come home, but it remains one of the most important episodes, in addition to forest fires, earthquakes, tsunamis. We have rising sea levels, we have melting ice caps, our vegetation is disappearing. All of these continue to affect us adversely. But one thing, what they do revalidate is the urgency of global action. I think we need to come together to address climate change and sustainable development for human progress and also our survival eventually. I think here I'd like to mention the UN Sustainable Development Goals. These have been around for some time, but I think in our situation now, the 17th one, which is the last one, which is about rapid action for partnerships, that's the most important one that we need at this moment. Partnerships between developed and developing countries, between private and public sectors, between established and emerging markets. I think this is the only way we can come together and mitigate climate change and have a successful adaptation process.
Our Fireside Chat topic today has been split in 2 parts, right? So the first one was how the virus led us or led governments to more sustainable development, and this has just been discussed with Sir Christopher. Now the second part is how can investors actually benefit from it? Could you elaborate a little bit on the latter part?
Yeah, thanks, David, for the question. So I think there are 3 ways, I'm speaking very broadly, in which investors can benefit. I think one is something I touched upon earlier, is partnerships. I think there are opportunities for new partnerships between public and private sectors, but also within them. Secondly, one can invest in strategic sectors where returns on investments are win-win both for the investor, but also for our planet, in the sense that if these investments are aligned to sustainable development, then everybody wins. And the third thing, what investors need to bear in mind, and this has been demonstrated again by the COVID pandemic, is to be proactive rather than reactive. And how can one be proactive? Is to undertake factual analysis. You know, Sir Pissarides pointed and alluded to the whole stream of fake news and which is driven by politics and ideology and all of that. This can be distracting. So factual analysis, taking calculated risks is important. You know, even the gambler in a casino takes calculated risk, and making strategic investment choices. I think these are very, very critical going forward.
We talked before about, was my last or second last question that I asked Christopher, was we talked about the winners and the losers of the pandemic. Are the opportunities for private investors equally spread across Europe or the globe? And do they correlate with how well a country has managed the pandemic? I mean, you know, again, I have to, I'm biased, obviously. I am German. You might hear this from my accent. Germany was somewhat praised during the first wave, saying, wow, they're doing so well. And now the second wave, or we're on our way into the third wave, we're doing suddenly not so well anymore, right? But nothing has actually changed about, or even, you know, the lockdown has become stricter and everybody is looking around and saying, hey, you know, Denmark is opening up again. How do they manage? Why can't we? So I think whoever was a winner at the beginning has become a loser in the second wave, and then perhaps vice versa. But I think there are certainly those countries who managed in general a bit better than others. Will they offer the better opportunities, or is it not really connected?
I think that's a very interesting observation. You see, I think how a country manages risks, it's up for political debate, and then we can also get into a discussion whether, you know, China managed it better, or the UK managed it better, or Germany is managing better. So I think that is going to be a quagmire. But what I would think is, independent of how a country manages its risk, or even independent of the maturity of markets, what the post-pandemic world has done is it's in a way, it's a kind of a great leveler. It provides private investors opportunities, of course, different types of opportunities, and that depends, as we know, on the macroeconomic situation, on the type of the investment vehicle. It depends on the business climate, or the particular sector, or the particular project, and indeed the risk appetites of investors. So there are a whole range of things, but I think, to answer your question directly, in a nutshell, it is not going to be a major factor, something that investors would need to bear in mind, but certainly opportunities abound.
Okay. What are, I mean, we were talking about this sustainability development move and the opportunities that come with it. But what are the risks that investors face? I mean, you said it at the beginning. You know, a sort of balanced risk approach. Even the gambler in the casino, he knows what risks he's taking. But what are the risks that investors face when they jump this sustainability development bandwagon?
I think, well, there's obviously the current risk that we are in. Everyone is there. There's the temporary travel and movement restrictions due to the pandemic. There's also the current global economic recession. We may or may not like it, but we are in it. And this is remains to be seen how deep it is going to be. Sir Pissarides may have more information and analysis on that, but it's a recession that has struck every economy. And the other risk, of course, which we have seen is in those sectors which are human capital intensive. So I'm talking about the service sectors, particularly tourism and the hospitality sector. So these are risky areas at this moment. But I think in general, I believe that opportunities outweigh these risks. In fact, some of these sectors actually present now to be the right time to get into them, so that one could ride the post-pandemic and the post-recession market surges, which are likely to happen as we have seen historically. Second, I think there are a bunch of financial grants provided by European institutions, by multilateral development organizations, such as the World Bank, various governments, European governments included, and public agencies for investments, particularly in the field of, and we discussed this earlier, green and renewable energy. So there are multiple opportunities in these areas. And of course, one of the ways to do it is to look for professionally managed investment vehicles, like Corinth, that effectively manage risks and rewards for investors.
So then let's talk about the mere practicality, really, of investing. How does an investor go about identifying the right opportunity in the sustainable development space, and where do they find them? I mean, I work a lot with family offices, and we have sort of a generational change, for example, taking place now. And then you might come from an industrial family that is heavily involved in the fossil fuel or fossil energy sector, for example. Now the next gens come along and say, hey, not really in line with Greta tells us, right? Or not in line with the ESG goals. So where do they go? Where do they find them, and how do they identify the right ones?
I think one sector which is staring us all in the face is health, particularly health technologies and health infrastructure. I think what the pandemic has done is exposed the fragility of health systems across the world, and it has created an enormous, both in the short and the medium term, demand for vaccine development, cold chain technologies, tracking and management of cross-border epidemics and pandemics, and we still continue to do that. There's opportunities of machine intelligence, artificial intelligence, and robotics in these kinds of technologies in the health sector, so that we as human the human population get a better handle on viruses and bacteria. But there's also a big space in health infrastructure. We saw China and India and Russia, they were struggling on the seams how to handle COVID patients. If you remember, we saw hospitals, 1,000-bedded hospitals, come up in 10 days. So what this signals to us is there are tremendous opportunities in the health sector, both in technologies and in infrastructure development and in future technologies, telemedicine. All these areas is one big area which helps the investor, but also helps humankind as well. The second area, which we already discussed, is green and renewable energy. I think the demand for non-renewable energy is on the decline. For example, crude oil prices are very low these days, likely to bounce back anytime soon. There's going to be increasingly more demand for renewable energy, whether it's hydro, solar, wind, and so forth, as European government policies and the European Union is pushing for these kinds of sectors and these kinds of renewable energy. And as already mentioned, there's gathering momentum for the Paris Climate Accord. So all these things are not going to go away. They're going to come very, very strongly. In fact, multinational oil companies like Shell and BP are embracing renewable energy technologies. Today, we see them investing in research on renewables, which was probably not even present 10 years ago. So I think in the future, we're going to be looking at heavy investments in clean energy that is produced, conserved, and used efficiently towards a healthier planet. A third and the last area, I think, which has opened up very recently is financing. And this is where private investors can play a role. The pandemic has adversely affected public financing. You know, governments had to give out economic bailout packages to the small and medium sector, and sometimes even to some very strategic industries. So limited fiscal space, limited budgetary space has given an opportunity for private parties to come in. And many governments have, you know, public-private partnership frameworks, and these actually offer robust provisions for many private investors to come in and take advantage of this period.
I would love to continue speaking to you for another hour, but we're running slowly but surely out of time, and we've got the first questions here that need to be answered. We've promised everyone a Q&A session. So Dr. Ranjit, I will say thank you so much for your participation, for taking the time, and kindly ask all others to join us now for a brief Q&A session. So Christopher, you're back already, and Andreas as well. Fantastic. Thank you so much, everyone, for your participation, for the answers that you have given, for the time that you've taken. Now, let me work my way through the questions. First one, what is your advice on the new generation in ages between 25 to 45 to invest in, and why? Who wants to take that?
Who is the question addressed to?
This is an open question. Whoever thinks is most equipped to answer the question, please feel free.
Okay, let me talk as an economist, not as a finance economist, but more as a growth economist. And now ages 25, 45, why would you want to invest? You know, first of all, an economist would look at the objectives of this investment, and the objective usually is to finance a nice, comfortable retirement at those ages. Therefore, you want to invest something that is going to give you a rate of return 25 years later. Go for ESG, I'd say, because it's sustainable. The rest is more volatile, financial, whereas the underlying fundamentals for sustainable investment are there. And now you want to select sector. Dr. Ranjit has already said, go for health. Find good health companies. Pity you've missed out on BioNTech and maybe AstraZeneca, but there will be more, unfortunately, that will offer it to you there, and that will give you sustainable, and it's going to make you feel better when you're 65 or 70. I hope you're healthy enough to continue working and well into your 70s, but it will give you, it will make you feel better as well that you're enjoying a nice retirement and you provided some social good at the same time.
Duly noted. I count myself to the group that was addressed here in the question, so I will take your advice very seriously.
I'll send you an input later for this advice since you identified yourself.
Andreas, this question, the next one, this is definitely one for you, giving you a chance to join the conversation again. Where are the funds of Corinth Capital coming from? In other words, are the investors private funds, governments, or family offices?
Thank you, David. Well, as I said during my welcoming note, Corinth Capital is a fund addressed to well-informed professional investors. So we're talking to high net worth individuals, family offices, institutional investors. We even have financial institutions interested in investing a good proportion of their reserves, because you see, these people see now, and I'm taking from both Sir Christopher's and Dr. Nayak's speeches, that Sir Christopher talked about the role of government, the role of governments in ESG investment themes, and then Dr. Nayak said about these global partnerships that are being created between public and private sector. It is really the first time that we see such a convergence of policymakers, regulators, and private pockets of investors coming together towards one direction. I mean, this is the way that sustainable investments are directed to. And we, as an institutional investor, enjoying the advantage of collective investments and regulation, transparency, the diversity that a portfolio of different projects offers, and so on and so forth. We feel that we are very good placed to source the best possible projects and produce the best possible returns in this category of investments.
I've got a very interesting question coming in now. Not sure who wants to take it. What are your thoughts on agriculture, economic, sustainable projects in Africa?
Part of the future, for sure. Part of the future. I mean, this is when we talk about, okay, we talked about renewable energy, we talked about waste management, but agriculture is undoubtedly within our focus. I can say to our audience that one of our projects in the pipeline relates directly to agriculture. It relates to aquaponics, and we are in the process of evaluating the projects through due diligence, financial, technical due diligence, and other. And it's definitely within the sphere of investments that we'll be undertaking, especially in a continent like Africa. I believe that the potential is pretty obvious, but I'm sure Dr. Nayak has more on that.
Yeah, I just wanted to add a little bit to what you're saying, Mr. Matsas, is that there are two quick areas where agriculture in Africa can basically boom. One is, of course, the space of research and development of new techniques that can be done in the African continent that hasn't been tried before. And second, I think there is an opportunity also for the African continent to leapfrog in terms of technology. Technologies that have been developed elsewhere can surely be tried and experimented on in newer parts and in newer regions, which can actually benefit not just investors, but I think the general economy of the continent.
This one here, it's not a question, it's a remark, but I'm happy to read it out anyways, because it just pretty much shows how well this is all going down, because nobody's dropped off, and we've been talking for an hour now. So a compliment, or several compliments actually, coming from all around the world, and just thanking all of you for the tremendous effort and for this platform, for putting this together, and for your participation and your insights. So just to let you know that that your insights are very much appreciated. So thank you also from my end here. Just quickly interjecting this. Now, a question, and this I direct at Dr. Nayak, because we actually discussed this in our preparations, and somebody read apparently our mind. How can the private sector benefit from governmental bailout packages?
Yeah, that's a very interesting question. I think first, the bailout packages, I think, are meant for struggling companies, struggling firms that really need an injection. So I think that's where the main thrust of the government is. But at the same time, as you know, no company works alone. There's always a chain, and then some, and many, and oftentimes the chain, as we go, as we progress, these are global supply chains and global manufacturing chains. So I think there are some priorities in the bailout packages which are directed, of course, addressing the damage that has been done by the virus. Of course, that is uppermost, but at the same time, every government wants to enhance infrastructural investments. They want to enhance employment opportunities. They want to restart the economy as quickly as possible, put a check on the recession. So I think all of these do present opportunities, and the bailout package is an immediate thing which is cash rich. It comes quickly. It has also a timeline, and I think it should be taken advantage of.
Okay, Andreas, please.
Thank you, David. If I may add to what Dr. Nayak said, obviously the question was referring to how private investors can benefit from bailout packages. I will twist this a little bit and say how we at Corinth took advantage, in the good sense, obviously, of government subsidies. One of our projects, one of the projects that our investment committee has approved, and we are actually in the process of deploying funds, relates to tire pyrolysis. It's a tire pyrolysis project in Greece. Now, obviously, when we evaluated this project, we looked at the project standing on its own 2 feet, and we didn't take into consideration any government subsidies. But then when we started the process, the project was awarded a subsidy from the development law because it was going towards the right direction. What we are saying throughout this fireside chat, the ESG investment thing. It was eligible for financial subsidies from the development law of the government because of the nature of the project, which obviously for any investor is a plus. It's a windfall profit.
Okay, we're 4 minutes overdue. So we will go very quickly through the remaining questions because, you know, I want to give everyone the chance to have their questions answered, but I know also everyone is a bit strapped for time. Question here, how should investors hold companies and boards accountable for E&S issues? Divest, engage, or any other ideas? A brief answer, please. Please.
This is just building upon what Sir Pissarides already mentioned in terms of holding companies accountable for ESGs. One thing which they can do is green auditing and green accounting to make sure how to see a company is faring on the sustainable development agenda. You know, we could build a series of indicators around it and hold companies responsible.
Okay. Yes.
Very quickly, David, taking on from what Dr. Nayak just said, this might sound a bit unrealistic today and for our audience to hear about green accounting. However, let me just say something which I'm sure will make people think. BlackRock CEO said about a month ago that any of our portfolio companies does not abide to ESG criteria within the next 10 years, we let go of such companies. I mean, this is the way investments go.
Andreas, next question for you, and maybe just a list of countries. Where is Corinth invested geographically?
Mainly in Europe, but without geographical restrictions. Our structure, our fund structure allows us through various compartments to invest in different strategies and geographies. So no restrictions, but we start with European investments. We have vetted projects in Holland, Greece, and the UK.
Okay. But are there options to venture into other territories, geographies, continents at a later stage?
Absolutely. I mean, one of the questions asked previously about agriculture in Africa, it's something we will definitely be looking at. And India is also of great interest. Unfortunately, I cannot say something specific because projects in such areas have not been vetted yet. But as I said before, no geographical restriction whatsoever. Investments in ESG projects globally. Okay.
Quick answer, please, on the following question. And this question is addressed to you, Andreas. What's your thoughts on investments in education, schooling, universities as an investment asset class?
Education and healthcare are always interesting investment themes. And as I said before, our fund structure allows for different strategies and different geographies. I think that with regards to education, what is really interesting to look at is under the angle of digitalization and online education. And it is something we are looking at as we speak.
So unless anybody else is submitting a question, I've got one last one, and then we will wrap up shortly. With regards, it has been mentioned a couple of times now, public-private partnership programs. A family business that has only done business privately and is now looking at the public-private partnership opportunity for the first time. What do you want to give them on the way? How should they go about it? And what is there to consider?
Well, I guess the best way to go about this, David, is through collective investments. Because, as you said, a family business that has been engaged in private investments in the past, it's more difficult to leverage on everything that it needs to partner with the government. What we do, on the other hand, taking advantage of our wide network, our directors and our advisory board, I mean, Sir Christopher, Dr. Nayak, is exactly this. I mean, the reason why we have decided to engage in these investments is because we felt the convergence of governments, policymakers, and private investors. And this is exactly what we are doing. And this is how we select our investments, the projects we'll be investing in.
Okay, one last question that's coming in here right now. The investments of Corinth in emerging technologies, and I just read it out: VC question mark, PE question mark, or public equity question mark?
Hybrid, and I will explain. That. Corinth invests through loan capital, but at the same time, this loan capital is zero interest, non-recourse. Instead, we acquire at least 50% of the project company, and this enables us to have control over the company, pledge the shares as an extra security, obviously first ranking charge because of the loan capital instrument, and at the same time ensuring the project in such a way so we safeguard investors' capital.
What a finish. I think we draw a line here. We ran 11 minutes over time already. I know that all of you have to run off also. You've got other commitments this afternoon. So let me make it short. Thank you very much. It was very, very interesting, a tremendous opportunity, I think, for all participants as well. A real honor for me to have you on our fireside chat and then to have such a star-studded panel today. A big thank you to all our participants. Thank you for bearing with us and you know, for more than the 60 minutes that we promised. Andreas, I want to let you wrap up and address the audience of how they can get in touch with you, if you will be in touch, and so on and so forth, what they can expect from you.
Actually, I guess this is the purpose of me being here, to say to everybody that I will be very happy to get in direct touch with anybody from our audience for further elaboration, answering questions, presenting who we are and what we do in more detail. I'll be happy to.
Fantastic. So, ladies and gentlemen, reach out to me with further questions. You've got my contact details. I will pass on everything to Andreas, and if there's need for further discussions, perhaps with Sir Christopher or Dr. Ranjit as well, I'm sure they will be happy to get back to you. Thanks for joining. Thanks you for participating in this panel. It was an absolute pleasure. I wish you all a very lovely afternoon, and hope to see you all very soon. Thank you very much.
Thank you,
David.
Bye.
Thank you.
Bye.